Okay, hi. Let me start the video here. Okay, hi, and thanks to everyone who's joined the call or the webinar. So yeah, let me. So I'm recording this as well, so we'll make that available afterwards. So the idea of doing the webinar in the first place was that basically we saw a lot of questions coming in about the EMA bot, and basically, yeah, I wanted to be able to run through that and give you guys some details on how the mechanics of the bot actually works. So I'll talk you through those. I'll also explain all of the parameters. I will then do a demo showing you how to set up some of the bots, maybe provide some guidelines, some warnings. And just to let you know as well, there are so some other resources. There's an article on our website on margin.de, and also there's a YouTube video tutorial, which is just a few minutes long, which gives some of the main points as well. But this is an opportunity to go into it in a little bit more detail. Okay, so basically, oh yeah, there's one other caveat that I won't be giving explicit trading advice. So this is more about the mechanics of the bot and how it works. But if you're coming looking for explicit trading advice, this won't be about that. Okay, so yeah, let's start. I will share my screen during the presentation, but just as a start, we should talk about what an EMA crossover bot or strategy is. And first of all, we have this term EMA. So an exponential moving average is what an EMA is. And it differs from a simple moving average in that the emphasis is placed on more recent data. So a simple moving average averages across all data points in an unbiased way, but an exponential moving average will favor or place a little bit more emphasis on recent data points. So it's a little bit more susceptible to recent changes in the price data, for example. And let's maybe take a quick look at that already in margin and how we can maybe how we can visualize that. Okay, so let me share my screen here. So I hope that everybody can see the screen. And okay, so let me basically show you then a moving average, a simple moving average, and an exponential moving average. And this here is a little bit annoying for me. So maybe I can minimize this. Okay, great. Okay. Okay, so to show a simple moving average, I'm going to go to the indicators and margin, which is this little flag here. And there's some different indicators. I'll choose a simple moving average. Of course, I clicked out of it, but I add the simple moving average. And here it's going to be over 20 candles. And it has this blue color. So we can see here is the simple moving average, and it's averaging over the past 20 candles. And now let's put on top of that an exponential moving average. Here I'll choose a different color so we can distinguish them. Okay, so there's not a huge difference here, but maybe the best point is to show here. So we can see that as the data changed here and the recent data started to trend upwards here, the exponential moving average moved up to this data a little bit faster than the simple moving average. And that's in general how it works. So the exponential, it follows the curve quite well here of the simple moving average. As this data goes a bit lower, the exponential, sorry, in this case here, as it goes higher, the exponential moving average changes course a little bit more quickly than the simple moving average. So it puts a weight on the data, the newest candle data. This is actually visualized here in the margin indicator. So even though there's 20 candles averaged, we see that 9.52% is the contribution of the last candle or the most recent candle. Yeah, so that's just basically to show you the difference of the two types of moving averages. Let me just X them out of this screen so there's no confusion in a moment. And so the EMA bot basically uses two different exponential moving averages. So there's a short-term one and a long-term one. So let's maybe just add one of these in here. So I'm going to click the strategy button in margin to create my EMA bot. And here we have a list of the different bots available. We go to EMA crossover. And this one, I will basically add in, I will call it EMA, and we'll do this with a 15-minute. So I'll call it 15-minute. Okay, let me go to the 15-minute view. Okay, and if we take a look here, we see two different lines, and we see that we have a red line, which is a long-term line, and in this case, the long-term line is smoothing over 20 candles. And we have a short-term line, which is this kind of gray or white line. And this is right now smoothing over 5 candles. So then the mechanism by which the bot decides whether to buy or to sell is basically that when the short-term line crosses the long-term line, that's always the criteria. Short-term line crossing the long-term line. And when it crosses from below, that's a signal to buy. And when it crosses from above, it's a signal to sell. So as you can kind of instinctively imagine here in this diagram, we can see the courses going down, 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 where then we basically see that these two lines are starting to come together. So this white line and the red line. And as you might expect, if the courses fallen a bit, when they cross, a buy will happen. And to just reiterate what I said before, so the short-term line, which is this gray or white line, is crossing the long-term red line from below, and it will trigger a buy signal. The converse is that as the short-term line crosses from above, then a sell will be triggered. And that's the basic idea. Okay, let me load another pair here because I already had a bot running here. So let me load a fresh pair. Actually, I will just load this USD pair. Okay. Okay, and I had some bot running there. Okay, but I'll close it off. So yeah, so let me load in an EMA bot. And actually this time I'm going to choose a longer time frame, but I'm not necessarily going to start it, but just to prime it. So I've set this 1 day view, and let me have a look here. So here we're looking at 1 day candles. And if I go back with the mouse here, you can see I'm going all the way back to March. Actually, people might remember the crash in the markets around March 13th. Corona was kicking off. President Trump had just banned travel from Europe, and all the crypto markets really crashed. So after the crash, we can see that at a certain point here, the Ethereum or Ether started to recover. And we see that there's a crossover point right about here. So in that case, the short-term the short-term line crossed over the long-term line, and this would have triggered a buy in this case. Now, the question is, where would the sell have occurred? And in this particular configuration, we can see they came close here, but didn't quite cross. And eventually they crossed up here. So given this long-term view, let's take a look. The buy would have occurred at about April 5th, and the sell would have occurred a whole month later. And let's take a look with margins ruler here. So if we were to get that particular trade, it would have been close to a 40% effective gain after fees. And that is one of the take-home messages I want to give in this. So the EMA bot is really a bot which is looking to or performs best in trending markets. So when the market is either really bullish or really bearish, but not in flatter markets. And we can look at some dangers there in a little bit. So that's something to just look out for. But we can see here, we would have made a really nice, and if you make 40% in a month, you're doing really well. Some of the best hedge funds don't manage that. Then we would have seen what would have happened afterwards. It would have exited the trade. It would have entered again. It would have maybe, I can't see so well there, but maybe exited once again a bit further up here. So let's see, maybe there was another approximately 20% to be made. And then we enter a period where it's a lot flatter and the gains will either be lower or even not at all. Maybe you even make some losses in this area here. And so yeah, so that's one of the main points I wanted to basically make is that if we have trending markets, and by trending I mean here we see a really bull trend, here's a bear trend. So in this case here, if we go out a little bit, the bot would have sold somewhere up here before the crash, and we would have went down, and here we would have also made quite a gain, okay, to where it entered again. So that's one of the take-home messages. Shorter term trading with the EMA bot can be quite dangerous, and you need to really take care then of parameters if you're going to do a shorter term, smaller candle trading with the EMA bot. Okay, another thing we can do is we can adapt these. So looking at the parameters. So first of all, right at the very top, we can see we can start with buy, sell, or any. So usually the bot is in a particular configuration where it's waiting and it's about to buy in the next cycle. Let's take a look here. We would expect that it would have already bought here. So maybe the next cycle would be to sell. So it's either in a sell or a buy mode. But the bot allows you to choose explicitly to buy as the first action, to sell, or any if you don't want to take a look at the lines and you have some funds on both sides. You can basically choose any as well. Then you can give the bot an amount to trade. So this is always based on the available funds that you have. So if you're buying, in this case, it will be how much USD you have, and you can buy a maximum of 0.149 Ethereum with the amount of USD. And if you're selling, then it also is based on what you actually have to sell. Okay, and then we have these parameters where we can adapt the actual long and short-term smoothing intervals. So we can take a look again at our example, and we can increase the smoothing, and you can see how that changes and where the crossover point might change as I adapt it. And you can do that with both of the long and the short-term smoothing. Yeah, so that's maybe it makes sense to, even though I'm talking about these longer time frames here, let's take a look at a shorter time frame and a little bit closer at some of the parameters. So when we move into a shorter time frame, there's one really important thing to notice, and that comes right here next, these crossover fine tunings. So as a default, we're waiting for the candle to fully finished forming. And that means that you can see the two lines, they don't extend up to the most recent candle, but to the candle beforehand, because this recent candle hasn't finished forming yet. This is a 10-minute candle. As soon as this finishes forming, these lines will push on and will basically meet with this, this candle, and then there will be one more emergent candle or candle being built in front of it. So this means that its reaction time to events, the market shifting one way or the other, is by dint of it waiting a whole candle to finish a little bit slower, and is anyway a bit slower by the time the two lines actually cross over. So you might expect, by looking with your human eyes at the chart, to say, oh, you know, I would prefer to have bought down here, somewhere down here. Or in this case here, there's the crossover, to have bought exactly here, but you'll find the buy is always a little bit further on. And it's because of this waiting for the candles to form. So in default mode, we need fully formed candles, but there is an immediate mode, and we can switch to the immediate mode here. And then watch as these lines, they extend one on further to the next candle if I switch to immediate. Okay, so they switch. And I get some caution here because now I'm dealing with candles that are forming and not fully formed. So I need these offset lines. The offset lines are defaulted here to be pretty big. But let me reduce the size of these. So I will reduce it to 0.02 and talk about what that exactly means. But the first thing to notice is that now the lines, as we go up here, they go all the way to the current candle. You can see that they're basically now taking the data from the candle as it's forming. And now we see that because we use this immediate mode, we are forced into using these offsets, and you can configure how big or how small those offsets are. But the offsets are basically designed to give a little bit of protection in case within a candle forming, the crossover lines happen very, very rapidly. And that can happen. So it can be quite dangerous that you buy, sell, buy, sell, buy, sell in a forming candle. And all the while incurring trading fees. And there you need to take care. So we added these offsets to protect against that. And but they are configurable as I just showed you. Now, going back to what we said in terms of where the buy and the sell will trigger now. So here we're in a mode by which there's been a crossover event down here. So we're now waiting for a sell event. And when the short-term line crosses over, now it's this current sell threshold is this yellow line. So it has to come down past the EMA line to the yellow line and cross it, and then we would get a sell event. And when we're in buy mode, it has to then cross over this buy offset threshold, which is this buy line. And they straddle the basically the long-term EMA line. Okay. So I'm going to show an image here apparently. So let me just go to here. I have let me close that. So I had some so I wanted to show this image, which basically just because it was a situation I saw and I thought might be interesting. So here we can see the short, so there's no immediate mode here, so there's no offsets, but also that means that we're in the second to last candle, not the last candle. And we can see the crossover event is about to happen, okay? Or it seems to be about to happen, and it should be a buy event here. But what we can see is just as it's about to happen, not only are we one candle back from it happening here, the price has moved up to here. So you can imagine if this crossover event happens in the next step, then the buy is going to arrive up here and not down where the crossover event is. So there's always a bit of a delay and a bit of an offset. And this can really, well, it can mean that you're just a little bit disappointed when you're looking at crossover events, expecting my buy or my sell to exactly happen there. So just a note of caution there that you have to take account of the mechanics of the bot and when it's actually going to trigger. Okay, so that was an image I wanted to show you. I also had a couple of videos that I wanted to quickly show you that I just captured as I was preparing this webinar. So the first one is maybe this, and we can see in action as the bot is about to cross over. Let me play it here. So we can see we're waiting for a sell signal, and the short-term line is about to cross over this sell offset line. Once it crosses the line, we should trigger a spot order, so a market order. That's also important to know that we might have to overcome a spread. The spread is quite tight here, but it could be a larger spread on coins with lower volume. But the main point is here, we see here's where the crossover is occurring, but the price and the order book is already moving away from that, okay? And it has to move away from it in order to pull this short-term line down over the long-term line. And boom, there we had it. So the line crossed, a market order was triggered. We see it here. So here we're even in immediate mode. So we're doing it as the candle is forming. The crossover event happens. A market order is set and it goes through, and it goes through at this price level. And we see the bot has switched now into the waiting for buy signal to happen. So, and we can see the order goes through here, and now the bot is waiting to buy. So this was one example. I think I had one more, yeah, with a 10-minute interval here. As we can see, we would expect a sell to happen here, and sure enough, it's also going to be a sell. This is the short-term line coming down, about to cross over. These are 10-minute candles. But we can already see that the price and the spread has already moved a bit away from where this crossover event will occur. And yeah, so let's just take a look at this. You can see the action happening here. Some trades going through, and the line is getting really close to the current sell threshold. Waiting for the sell signal. Now we see that it has gone through as the new candle starts to form. So we push the lines on to the next new forming candle, and we see our sell order now coming through. But once again, it's a little bit away from the crossover event. Okay, so yeah, let me go back here. So we don't only have, so here we're maybe interested in starting in a sell. Let me start the bot. Or before I start the bot, let me set another few parameters. So we've set these offsets like we want them. Some other parameters that are possible is you don't need to look at just the close of the candle, but you can look at all of these. So the open and the high, the low, the mean, the VWAP, so the volume weighted average price. And you can choose differently on both sides for the calculation of where exactly the line is. And you can also add stop loss, which might be important. So let me add a stop loss of 1%. I don't see it yet. Okay, but it's here. You can also adapt that in the chart. And another really important parameter is a minimum effective gain. Okay, and let me maybe switch here just to show you. I think there's one running. Yeah, I have one running here for a minimum effective gain. You can see I come in here, I see my bot, but I don't exactly see the parameters of the bot because I'm in the wrong candle size. So here it tells me my bot is here, the 5-minute bot. So I go there. And here we can see that there was a crossover event, a buy event. It bought, but we had set a minimum effective gain, a sell gain. And that is then placed an amount away from the bot. And so in order to ensure that we get this minimum effective gain, or so that we visualize it as well, we see the current sell threshold is now affected by that. It's affected by the minimum effective gain. So it pushes the point at which the crossover happens above. So the crossover has to happen and it has to be above the minimum effective gain. So we can see here, it looked like it threatened to cross over here. It didn't, but had we not set this minimum effective gain and had it crossed over there, we would have already sold. But this might be something you want to do, so use this with caution. Maybe the market goes flat and you want to sell, buy, and then get ready for the bullish trend that happens after that. So it's really something you have to get used to and figure out what you want to do. Here it looks like it's about to cross over, but it won't trigger the sell because we're below the minimum effective gain. And so this visualization shows you that there. It might have already crossed over, but we haven't sold. Okay, so going back to our example, we're about to start. We've set a stop loss here. You can also set it on the opposite side. If you want to get out, it's a little bit like a take profit there, to be thought of as a take profit on the sell side. But here we're doing a stop loss on the buy side. We have this minimum effective gain, which we can also set to some other value. And let us start the bot. So here, we're waiting for a sell signal. And we might be just about to get a sell signal, which would be great. And another thing we can also do is, well, first of all, we can see the crossover is about to happen and the spread is down here. Maybe you also think, oh, it's definitely going to sell, like, or it's definitely going to crash, the market is, and we provided these trigger buttons here as well to allow you to then trigger the sell to happen now because you think you know better, and then it should go into the buy condition for the bot. So we can also trigger this, and which I've just done. So we've triggered it. Here's the sell, and the bot is now waiting for a buy signal. So if the market now goes down, it should buy below, and that's the idea. It's also possible, as you may have seen, to set multiple bots on. I see the time is getting tight here. Multiple bots on a single pair, so we can add a second bot. Could be one of the other bots we have, or another EMA bot. And I see I've mislabeled my first one there, but let's say I'm going to set a 15-minute bot here. Then I can go to the 15-minute candle. And then maybe I'm going to have a bot which buys this time. I set a stop loss and yeah, and I start my bot. And now when I am in the 15-minute candle, I will see the parameters and the EMA lines for the 15 EMA 15 bot. And otherwise, if I go to a different time frame, I see, okay, here's my 15-minute. Okay, I'm on the 15-minute bot here, the tab, but I'm in a different candle. I want to see it. I go back to here. I go to a different candle view, and I want to see my one. In this case, the 1 day, but it should be 5 minutes. Then I see here, okay, this is where this bot's parameters are, and I click back to the 5 minutes, and I see the lines. So just in case you have multiple bots, that you can find them again. When you click into the bot you want to see, you'll be given an indication here as to where it is, and then you can see the bot. Okay. Once again, to reiterate that this bot is meant for trending markets, so markets that are either bullish or bearish. And basically, if a market goes flat and you are running this bot, you can get into real trouble because it can, given these offsets away from the crossover events where these actual trades occur, you can really incur a lot of losses. So in more flatter markets. And maybe I even have an example here. If I go to Binance and here there are many, in a bit of a flatter bit of the market, you can see buys and sells that occurred, and they're basically all losing me money here. So if I hover, I can, I don't know why my tooltip isn't showing right now, but basically we can see that these are basically making up to 0.6% losses, also here and here. And there are a whole other bunch. So as the market was flat, it made a lot of buys and sells, and there you really need to take care. So you need to really think about, so is the coin on a run, either bullish or bearish? What's the history of the coin? What's the movements from, like if I look along here, it's about 2%, where I should set my parameters to ensure that even with this slippage, like we saw, that on average, we're still going to make gains as we go through these cycles of buy-sell cycles. Another note of caution is that if the bot has no candle data at all over a period of time, it will stop. So if you're really working on lower time frames with low volume coins, you're in danger that the bot will just stop, maybe just when you want it to not stop. So take care there. Okay, I just see I'm at the half-hour mark. I want to just finish up then by saying that, yeah, we have a lot of other bots as well. We have the margin maker, Bollinger Band, static ping pong bot, and scale trading. We also have videos for all of these. We have the Python strategy editor for anyone who's able to code in Python and develop their own strategy. And we're working on improving things all the time. So yeah, so it's, and we know that many people want a trailing stop, and that's something that we hope to bring to all the bots and to the terminal also soon. Let me call back up. I'm going to call back up the call. I think it's here. I'll stop sharing for now. Okay, I have a few questions. Maybe before I get off here, I'll try to answer. Okay, so what's XBT? XBT is just Kraken's name for Bitcoin, BTC. I don't understand this audio with my question, so basically I'm the only one that can talk on it so far. That's true. The problem is margin didn't react fast enough to what the lines are showing. I don't know what that means, but I think I talked through it in quite some detail there. So to show the mechanics of it, it reacts exactly as it as it should in terms of how the bot was built. As I said, in order to get two EMA lines to cross over, the market either has to drag the short one down or to push it up to cross over. And by the time it actually crosses over, by dint of the mathematics of these two lines, the spread will be a bit away from that crossover event, but then the bot will trigger. Okay, even in immediate mode. Yeah, thanks for it's a lousy bot, Martimir. I think you could really tone it down a little bit. I'm here to explain the bot. Okay. So the work and what percentage can we make without a lot of effort? I'm sorry, that's something that we can't really answer. As I said, it's a mix between machine and bot. And then the final question, can you use margin on two different dedicated servers at the same time? You can, as long as you're not using the same API. So there's a professional license to get multiple APIs, but because right now you can only have a single API registered for each exchange. So that's something you need to take care of. We can also talk about that. It's a bit unrelated to the EMA bot. Okay, guys, so I'm a little bit over the half hour. I will try to make this available so people can look back at it. And yeah, if the direction is good, we maybe can think about doing another one in the future. So thanks to everyone who joined the call, and yeah, till next time, take care.